So Wall Street is off to a rocky start for the year as the Nasdaq appears to be entering correction territory. Never a good word. Stocks once again finished lower yesterday. The Nasdaq Composite was down more than 1%. The other two major indexes also finished in the red, with both the S&P 500 and the Dow Jones Industrial Average falling nearly 1%. On Capitol Hill today, the House will be holding a hearing on cryptocurrency amid growing concerns that the mining of the digital money is becoming an environmental issue. Crypto miners are facing scrutiny over the escalating amount of energy generated by fossil fuels that is used to extract the digital tokens from the blockchain. According to the University of Cambridge, Bitcoin alone uses about as much electricity as Ukraine. And are you thinking about switching careers? Well, JP Chase is raising pay for junior bankers for the second time in 7 months. First-year investment banking analysts at the company will now receive a starting salary of $110,000. But today's top story is jobless claims, which will be released by the Labor Department in less than an hour from now. MoneyWatch reporter Irina Ivanova is joining us now to discuss. Irina, really good to see you this morning. The weekly jobless claims report from the Labor Department will be released in less than an hour from now. What numbers are you expecting to see there?
Morning. So economists are expecting claims to fall a little bit from last week. The consensus estimate is that we'll see about 220,000 jobless claims, which would be roughly the weekly level that we were seeing before the pandemic struck back 2 years ago. But there's a lot of uncertainty around this estimate, and that's because when you look at sort of the patterns with jobless claims, we've had two basically opposing forces. So the overall trend is they have been falling. This time 1 year ago, we had nearly 1 million people every week filing initial unemployment claims. And now we have gone all the way down to roughly the 200 to 220,000 a week level, which again is the level that we had pre-pandemic. And about a month ago, we hit record lows. We hit a 50-year low. Against that backdrop, where overall it's been falling, we're of course in the midst of the Omicron wave. And in recent weeks, we have seen those claims ticking up. Even though they're still at a low level historically, they have been going up recently.
So the number of Americans filing new claims for unemployment benefits increased to an 8-week high in the first week of January. Of course, as you know, we've been talking about it because of the surge in COVID cases. Just what is the relationship now between COVID and the labor market?
It's something economists are watching very closely because the recent uptick in unemployment claims has correlated with the Omicron wave. And we've seen indications that it's actually reducing working hours. So according to a recent survey from the Census Bureau, in the first week of January, there were nearly 9 million people who said they were not working because they either had COVID or were caring for someone with COVID. And that's triple the number that we had in December. Plus, there's another 3 million who said they weren't working because they were afraid of contracting COVID. So it's a really big question. And while the Omicron wave seems to be peaking and passing in large cities, it is still rising in smaller communities. And the job market does tend to trail public health by a few weeks. In other words, when cases rise, it takes a few weeks for that to be reflected in the jobs numbers. So we may not see the full impact of the wave in the numbers that'll be released, an hour from now. We will know more when the monthly employment report is released in January, for January in February.
In February. All right, Irina, thank you very much.
Thanks for having me.